This is the biggest ETF in the entire world, and in this video I'm going to explain what it is and we'll talk about why it's so popular. So SPY, Spider S&P 500 ETF Trust. So here is a chart of the price from June of last year till now, and you can see that it had some consolidation here and then it shot higher, and there is the closing price. Pretty cool, right? And on this website you can find really cool stuff. FinViz. I'll leave a link in the description in case you want to check this website out and maybe check out some of the extra features it has. It's really, really cool. Let's go to Yahoo Finance so you can see it here again. And this is the chart. Here's the price chart since its inception. So what does this hold? This is basically holding the stocks in the S&P 500. So when I think of the S&P 500, I think of SPY because you can't directly trade the index, okay? What you can do is you can buy an ETF like this. Mutual funds, those are the old school way of doing things. You can still buy those though. Closed-end funds, those also exist still. Futures, that's another way to invest in an index. But this is a very easy way, SPY, and this is the biggest one in the world, the biggest ETF in the entire world. Pretty cool, right? It does pay a dividend, 1.3%. And that dividend is paid quarterly. For example, if we go here to historical data, we can see those dividends are paid quarterly since inception. So 4 times a year, you receive payment, and that's how much you get per share. So it's not a lot because if you look at the percentage, right, do some basic math, you can see that it's not so much. It's gone up 7.57% year to date. And then here's the returns we've had in the markets. Very, very good, right? 3-year return, 10.76%. 1-year return, 34.52. Year to date, it's doing great so far. So yeah, really interesting, right? Interesting instrument. The reason it's so popular is because it's very old. Look when it was created. I mean, that's a long time ago, right? January 22nd, 1993. That's old. And because of that, it became heavily traded. And because it's heavily traded, it has a very liquid options market. So people trade it a lot. It's just a very heavily traded instrument. It's got a pretty low expense ratio. You can look at other ones that have lower expense ratios like VOO, 0.03, but not traded as much. Still traded a lot. I mean, that's pretty good volume there, but I feel like the spiders are more popular. Yeah, look at that. Big difference in volume. Net assets here, over $500 million. If we look at VOO, which is also, well, this has more net assets. Okay, more net assets on this one. But the spiders, pretty awesome. Anyways, take care.